this regulatory issue that you're raising, and it's a good one. Of all the entities that went to zero, that went to bankruptcy in the FTX portfolio, the only one that is not bankrupt out of the 130 plus, and this is, probably the best evidence of why we need regulation, is Ledger X. Why? It's regulated by the CFTC. 100% regulated. It is not bankrupt. Had the other entities been regulated wherever they were, they would too not be bankrupt. And so just look at this. This is a use case of why we need regulation. There wouldn't be this tragedy and all of this drama and all the rest of this stuff and the loss of billions of dollars. The lack of regulation has caused some problems here, and it will continue to. And the evidence is right here. The only entity that didn't go to zero in the FTX portfolio, CFTC forced the scrutiny, forced the transparency, forced the proof of where the assets were held and the reserves, forced the lack of commingling with the assets. They forced it. They did it. Proof positive that you can regulate this asset class. Don't have the records. Here it is. After my accounts were stripped of all of their assets and all of the accounting and trade information, I couldn't get answers from any of the executives in the firm, so I simply called Sam Bankman-Fried and said, "Where is the money, Sam?" He said he had been refused access to the servers. He no longer knew. I said, "Okay, let's step back. This is a simple case in my mind of where did the money go?" And I said, "Sam, walk me back 24 months. Tell me the use of proceeds of the assets of your company. Where did you spend it?" And then he told me about a transaction that occurred over the last 24 months, the repurchase of his shares from Binance, his competitor. I didn't know this at the time, but at some point, CZ or Binance, who runs Binance, purchased 20% ownership in Sam Bankman-Fried's firm for seed stock. And then over time, and I asked him, what would compel you to spend $2 billion was the number he was giving me at that time. Later, in a subsequent conversation, about 24 hours later, he told me it could have been as much as $3 billion to buy back the shares from CZ. I asked him, what would compel you to do that? Why wouldn't you keep your assets on your balance sheet? And why would you offer this to just one shareholder? He said, because every time we went to get licensed in different jurisdictions, because you must understand the prize of crypto is to get regulated. For all the talk we say about Bitcoin and everything else, no institutions own this. I work for the sovereign wealth and pension plans. They don't touch this stuff because it's unregulated. Between these two, let's call them frenemies, because they obviously were potentially the two largest shareholders in the firm, they had a disagreement. They had a falling apart. Apparently, according to Sam Bankman-Fried, CZ would not comply with the regulators' request in these different geographies, these different jurisdictions, to provide the data that would clear them for a license. He withheld it, according to Sam Bankman-Fried. The only option the management and Sam Bankman-Fried had was to buy him out at an extraordinary valuation of close to $32 billion, less apparently a 15% discount. That stripped the balance sheet of assets. You ask me why it went bankrupt? Go to the last week. All of a sudden, in social media, CZ is asking for another $500 million. He wants to do a block trade of FTT or the proprietary token of FTX. Wants it converted back to fiat. Why would you put that out there? You know it's going to push down the pressure. It's going to push down the value of that coin dramatically, and that's exactly what happened. Every trader knows that if you have a large block trade, you go negotiate a clearing price with other buyers, and you do the transaction. In my view, my personal opinion, these two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated global monopoly now. They put FTX out of business. Now, lots of other reasons.
crypto ecosystem makes possible. One of the categories that comes to mind is the ability to use stable coins in conjunction with smart contracts. Basically, it turns into what I think of as programmable money, where you can write into the code a payment that will occur based on some exogenous and verifiable event. And the payment requires no human intervention. It just happens when the exogenous event occurs. So, Ms. Schulp, I wonder, first of all, could you comment on whether you think there's a lot of future in this idea of programmable money? And then secondly, I think you're familiar with the legislative framework that I've laid out for stablecoins. I think the heart of that is the requirement that we have 100% cash and cash equivalents as a backing for a stablecoin, and oversight by the OCC, but not the Fed. And I wonder if you would comment also on whether you think that is the right approach to regulating stablecoins.
Of course. So I do believe that stablecoins have a lot of promise, not only in terms of the programmable money concept that you state, but also in terms of just being a faster and more stable way to work within a digital ecosystem rather than relying on kind of our current creaky payment rails. Stablecoins can offer a lot of alternatives in that space where we have truly digital money. I am familiar with your legislation, and I think that
I also want to thank Senator Toomey for his wonderful leadership on this committee, just in the event this is our last hearing. Thank you for your service.
Hearing tomorrow.
We're conflating topics today. Digital assets are not on trial. Fraud and organizations are on trial. So let's separate digital assets from corrupt organizations. FTX, as I've been saying for the last few weeks, is good old-fashioned fraud. And what they did is separate from digital assets. Now, we've all heard that FTX lent its executives hundreds of millions of dollars in commingled customer funds for personal use, and customers who tried to wire money to FTX were instead given Alameda's routing number. That is fraud. That's fraud whether it's conducted in US dollars or euros or digital assets. That is fraud. Additionally, even though FTX was a multi-billion-dollar enterprise, it had a shocking lack of corporate controls and enabled affiliates to conceal the movement of money and take on enormous liabilities, enabling the misuse. Well, they misused customer assets that were supposed to be appropriately safeguarded. FTX, in its terms of service, said title to customer digital assets always remain with a customer. Now that we know is a lie, and now millions of FTX customers around the world will see
structure that we apply to existing trading of stocks and bonds on exchanges tied to broker-dealers. That is not complicated. It's already been implemented in other countries. And so, and I take issue, Senator, with your concept that it makes it easier to do money laundering. Currencies have been used for drug trafficking since the 60s in the American dollar, when it was thrown out of a Piper aircraft in a duffel bag. The American dollar is also used by bad actors all the time.
Mr. O'Leary, I appreciate your point that everyone tries to engage in money laundering. That's what terrorists do. That's what drug dealers do, and that's what states like Iran and North Korea have done. The only point I'm trying to make is, should the same rules against money laundering apply to crypto in the way that they apply to banks, to stockbrokers, to credit card companies, to Western Union? And I think your answer to that was yes. Is that right?
No.
Mr. O'Leary, you have 30 seconds. Keep your answer short.
It's not yes. I'm just saying, if you know your client rules on both sides of the transaction and use a crypto such as USDC that is regulated, you solve this problem, Senator, overnight. Potential of crypto. In fact, the recent collapse of crypto companies has a silver lining. This nascent industry is culling its herd. Going or gone are the inexperienced or incompetent managers. weak business models, and rogue, unregulated operators. Hopefully, these highly publicized events will put renewed focus on implementing domestic regulation that has been stalled for years.
On this concern that I have, particularly about Binance, about the Chinese Communist Party's role and support of that. To be clear, Binance is being proliferated around the world. It's a state-backed network. They're proliferating in emerging markets in a very predatory fashion. They're in developed markets. And again, now they have an even more open platform as FTX has been taken down. But if you think about an example like Binance with ties to the CCP, a committed partner to the Belt and Road Initiative, and particularly as it expands its market dominance with the collapse of FTX, what does that spell if lawmakers here in America follow through with their threats to ban digital assets or leave the current regulatory uncertainty in place? What does it mean for the global crypto market in general? What does it mean for our nation's national security and our economic security? And most important, what does it spell for the dominance of the U.S. dollar as the world's reserve currency?
Regardless of whether Binance itself is connected with the Chinese Communist Party, which Binance denies, but regardless of whether that's the case, by having a system in the United States that's unclear, that's regulatorily hostile, it could go so far as banning cryptocurrency in the United States, we would be losing the position of having the possibility to maintain American dominance for these technological innovations.
I'm deeply concerned about that.
We would also be losing many of the great minds that want to work on these types of projects that can make strides not just in blockchain and cryptocurrency, but in other technological functions.
To be that of gambling and speculation interesting, that was exactly what we described the New York Stock Exchange 150 years ago. And what happened was, because of the nature of the risk, we regulated it. We did it for bonds. We called them securities now. Back then, they were speculations, no different than this nascent industry. The reason this is happening over and over again, and we'll be back here again soon when the next one blows up, is the lack of regulation. That's why we regulate stocks and bonds. They are speculations too. You speculate the profits of the companies underlying those securities. We need to regulate this. I mean, this premise that it's some kind of different issue, it's not. It's just unregulated Wild West, and it will go on and on and on. It's a definition of madness, is expecting a different outcome. I mean, that's just, it needs regulation. Was to say that the potential of blockchain technology in authenticating physical assets and contracts and tokens, as you suggest, is incredibly powerful. In fact, I think what's going to happen as we peel the onion on FTX over the next year or two is the shining outcome of the success of the blockchain to track these assets will become the focus of everybody. We will realize every security or token that left FTX, left Alameda, got traded between shareholders, all tracked irrefutably on the blockchain. The power of this technology is very harnessable, very powerful, and of course we should lead the world in it because so much of it is developed here. The hottest hands coming out of MIT right now, where do they want to work? A third of the class. They want to work on the blockchain. You can't take that much potential and not expect extraordinary outcomes. This is a remarkable technology. Yes, it requires regulation, but if you just ask where the hot hands are going, the great engineers, this is where they're going.
And from your perspective as an investor, Mr. O'Leary, what needs to change here in Washington from a regulatory standpoint so that capital actually does flow to U.S.-based entities and empower U.S.-based entities to win on the global stage?
Every global platform, the number one prize is to be regulated in the U.S. market, the number one financial market on earth, period. Now, when you talk about other money center banks or other financial services industries that want to do business in the U.S., they must disclose their worldwide operations. They are scrutinized by the rules we already have in place. A coordinated effort between the Canadian regulator, the U.S. regulator, the ADGM in Abu Dhabi, the regulators in Singapore, basically laying out the ground rules for any entity that wishes to do business in the U.S. or any of those jurisdictions, solves this problem. If Binance is not willing to, and you started by talking about them, disclose, and the reason that Sam Bankman-Fried claims he spent $3 billion was that he could not get the regulators to approve the fact that Binance owned 20% of their platform. CZ was not cooperative with any of those regulators. He was shut out of those markets, and he realized the prize was to get regulated for institutional capital. Just having 4 or 5 markets coordinate, as we do already in other securities, solves this problem in perpetuity. And all these regulators talk to each other. I've been to Abu Dhabi. I've talked to the ADGM. I seek a license there. And I've done the same in Canada. I'm an investor in the license there. These are long-term, very sound structural concepts, but it needs a coordination. And in one phone call, we could solve this problem.
Alameda, FTX's sister company, is Tether's biggest client.
Of the jobs in the American economy. In 2017, I was a public critic and skeptic of crypto and blockchain technology. As the global regulatory environment began to open up in 2018, I began to invest. Now I am a shareholder in multiple companies involved in crypto technology, including WonderFi BitBuy, the largest and first regulated broker-dealer crypto exchange in Canada, Immutable Holdings, a developer of NFT technology, and Circle, the company that brought USDC stablecoin to market. I've also invested in multiple crypto tokens, infrastructural level 1 and level 2 blockchains. I am of the opinion that crypto, blockchain technology, and digital payment systems will be the 12th sector of the S&P within a decade. Many of these technologies are going to disrupt the existing financial services sector with faster, more efficient, more productive, and more secure ways of investing, paying, transferring, and tracking assets. As you are aware, Bitcoin, a store of value, is not a coin. It's software. Ethereum is software. Blockchain is software. In the last 30 years, every American enterprise has driven major efficiencies using various versions of enterprise software, and crypto is no different. The potential of these crypto technologies is astronomical in scale. In August of 2021, nearly 3 years after I started allocating capital to the crypto sector, I entered into an agreement with FTX to be a paid spokesperson. I was paid approximately $15 million for these services, plus approximately $3 million to cover the portion of the taxes due. Of the remaining amounts, approximately $1 million was invested in FTX equity and approximately $10 million in tokens held in FTX wallets. The equity is now most likely worthless, and the accounts have been stripped of their assets and, interestingly, financial records. I've written them all off to zero. Because I was a paid spokesperson, however, I never invested any capital from our partners or LPs in FTX. The capital lost was from an operating company that I had 100% ownership in. I'm using my own capital to pursue record recovery of the FTX accounts so I can conduct a forensic audit. The truth of this,
Bitcoin is controlled by a few core software developers, fewer than 10, and they can make changes to the software, and then that software is implemented by mining pools, and there are just a few of them. So in all these spaces, there are definitely people, often a very few people, pulling the strings. But the fact of the matter is that they are unidentified and unregulated, and that is not an ideal space for purpose. Even if it were good technology, though, it would not fix the underlying political and structural problems that limit access to financial services. In many ways, relying on the crypto industry to improve access to financial services is like adopting a policy to open more casinos in underserved communities. And to those who say that crypto investment is a matter of personal choice, crypto creates problems even for those who choose not to invest in it. It facilitates ransomware attacks, sanctions evasion, tax evasion, has significant environmental consequences, and, as I've already discussed, could cause financial crises if allowed to integrate with the traditional financial system. I would submit that the United States should not want to be a world leader in the worst kind of innovation that allows its suppliers to profit handsomely, but offers little benefit to society, and in fact inflicts a multitude of harms.
And I think, Professor Allen, you may have touched on this in your testimony, the clunkiness of the technology behind Bitcoin, you could never go to scale no matter what. If you only do 5 or 6 transactions per second, that is not a scalable tool, and obviously at technology, at a power and environmental costs that just doesn't make sense to me. But I'm going to try to get as quick as I can in my
legislation that would ban banks from integrating cryptocurrencies and crypto technology. If that were to happen, as an investor, I would short every American bank stock because it would make it the most uncompetitive financial services sector in the world. The innovation that is coming forward, once regulated, is going to be profound in terms of how it changes the cost, the efficiency, the auditability, the productivity of the banking sector. Just look at things as simple as ACH transfers, how archaic they are. Look at the Fed wire.
So let me just stop you there. I only have so much time. So you do not agree with isolating it from the banking system?
That's insanity.
Okay, Ms. Schultz?
No, I also don't.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we get another Senate hearing. And about 90% of it was not about Sam Bankman-Fried. Guys, remember, out of sight, out of mind. And the bank man goes behind the curtain. And guys, we have Kevin O'Leary speaking about Ledger X. And we know that's the reason why Sam Bankman-Fried is innocent. He was just working for the NWO, so therefore they can put all these derivatives on blockchain. And remember, the Crypto Teacher told you. Then we have Kevin O'Leary takes all the eyes off the bank man and puts them on BINANCE and CZ. All the illegal activity that we know that happened on FTX, and also the bank man admitted all that attention goes off of him, and now they're going after Binance. We know the NWO is the masters of distraction. And then we have Toomey talking about programmable money, stable coins, telling you what, when, and how to buy. And remember, guys, you have 3 to 6 months to spend it, or poof, it's gone. And Senator Loomis was the only one to try to get everybody back focused and talk about the bank man's fraud. And then we had Senator Haggerty stated that Binance was under China's control. Now, guys, you know I told you in the long run, I believe that Binance will come under the control of China. But right now, we clearly know that is not the case. You can't say that China's banning all crypto and then say they control Binance. That makes no sense whatsoever. But we saw Senator Haggerty pull a Kevin O'Leary. And Kevin O'Leary was just there to take the attention off Sam Bankman-Fried, make him look innocent, and then plus tell us how great blockchain and crypto is. And then we had the nerve of Mark Warner speaking about Bitcoin, saying he doesn't understand it, it's slow and clunky. But guys, we know he is one of the technology leaders in the cell phone transformation. But guys, we know when it comes to Bitcoin, if you've ever read the white paper, you know that Bitcoin could have scaled, but the central banks took it over. And then we had Ben McKenzie. That's right, guys, an actor. And I have no idea why he was there. Yes, I do. Because, guys, we know your life is an illusion and TV is your reality. And Ben McKenzie was not the only actor up there. We know these politicians are paid and bought for and are told what to say just like actors. And remember, the Crypto Teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID 33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.